Good morning, hello and welcome. You tune into Market Cafe with me, Ankita, Saxena, and with me is Kanishka, Sarkar. In the next 1 hour, we'll take you through how the global news is shaping up and what will be the impact on Indian markets and what are the cues to watch out for before we start trading on D Street today. But first up, Kanishka, let me come to you. Wall Street, actually there are very flat moves coming in on Wall Street. We did see that rally coming in on the tech stocks, but yesterday we saw those tech stocks give up all those gains.
Absolutely. In fact, the US markets slipped yet again. It was a mixed day. As tech stocks, like you pointed out, they dragged indices lower. The S&P 500, that fell about 0.2%, marking its fourth straight day of losses, while the Nasdaq, that dropped 0.6%. The Dow, on the other hand, that was bucking the trend yesterday, inching up about 16 points to that 44,938 level. Now, big tech names like Amazon, Apple and Alphabet, they fell over 1% yesterday, while chip makers like Intel and Broadcom, they also weighed on the sentiment. Nvidia, meanwhile, which was down over 3% in intraday trade, managed to close almost flat. Now, all eyes are going to be on Fed Chair Jerome Powell's speech at Jackson Hole on Friday for clarity on the path of interest rates going forward. Now, futures suggest an over 80% chance of a rate cut in September. Apart from that, for today, Walmart earnings, workday results, along with jobless claims data and existing home sales data are the key triggers that we'll be watching from the US markets. So that's how the US market shaped up and the cues that we're looking at for the rest of the week. But how are things on the crude front, Ankita?
Right, Kanishka. So on the crude front, we did see crude rise up on Wednesday as the American Petroleum Institute reported a drop in the U.S. crude inventories, and investors awaited the next step in talks to end the Ukraine war, with sanctions on a Russian crude remaining in place for now. Brent crude futures rose 66 cents or 1% to $66.45 a barrel. As far as WTI is concerned, those futures for September delivery set to expire on Wednesday gained 78 odd cents or 1.25% to settle in at $63.13 a barrel. Now, crude fell more than 1% on Tuesday on optimism that an agreement to end the war seemed closer. However, US President Donald Trump conceded that Russian President Vladimir Putin might not want to make a deal. So that's where crude is settled at.
Absolutely. Let's now shift focus to the Indian markets as well and see how the momentum was yesterday. Now, winning momentum stays intact on the Lal Street, for the third straight day yesterday, with the Nifty closing above that 25,000 mark for the first time in 17 sessions. In fact, a strong day of gains for tech stocks in India yesterday, with all constituents ending the day in the positive territory. Now, let's go across to Snehi to get us a roundup of all the market action yesterday.
Well, yes, the third consecutive day of gains is what we've seen for our markets yesterday. Good morning. It was Nifty that was up about 0.2%. Good move coming in at 25,050. So we've not only crossed that 25,000 mark, but yesterday we were able to hold on to that as well. Very good recovery coming in from the day's low, slightly off the day's high, but not much to complain because Sensex too was up 0.2%. But weakness in the entire market was seen from the banking and financial SPAC, with Nifty Bank that ended lower with cuts of 0.3%. You had Nifty PSU banks, financials that also were trading in the red, and that's where they closed as well. Names like Infosys, TCS, HUL, Nestle, NTPC, Tech Mahindra, Tata Consumer, these were the top gainers on the Nifty. On the flip side, pressure being built on BEL, Bajaj Finance, Shriram Finance, Tata Motors and IndusInd Bank that kept the Nifty slightly away from the day's highest point. The broader end of the market also outperformed the benchmarks nominally, so good moves on that front as well. Select sectors like IT, they were doing very well, about 2.5% intraday gain coming in on Nifty IT, with both the large caps and the mid caps participating. Following that was FMCG, realty, metal, energy, auto slightly on the flat line, but with a hint of a positive bias. On the flip side, big cuts coming in on Nifty Media that led lower by Nazara Tech, almost a 13% cut coming in after the online gaming regulation bill was tabled in the Lok Sabha. Following that, you had Nifty Pharma, financial services, banks and PSU banks that ended in the red. Some other stocks that ended with cuts were Aurobindo Pharma on the back of that Zentiva acquisition that they have denied. Still, there was no material recovery in the stock, down by 4%. Hyundai, Aditya Birla Real Estate, Bharat Forge, Muthoot Finance, Syngene, Thermax and BEL. So some of these defense counters were also reeling under pressure. On the flip side, good gains coming in for Ola Electric, up about 19% yesterday. Godfrey Phillips up about 13%, did very well. Aegis Logistics, RCF, Sonata Fair, Lemon Tree, Chalet Hotels, Honasa Consumer, Westlife. So all of these consumption names and the broad travel and tourism and QSR names are doing very well. All eyes are going to be, of course, on that GST GM rate rationalization meeting today and how that impacts our market.
Absolutely. So those are the cues to watch out for in D Street today. But let me go across to my colleague Pulkit Bandi, who's standing by with the FNO setup for today. Pulkit, take us through what does the FNO verse look like?
Good morning, Ankita. So let's start with India VIX. The current value of Index VIX is around 11.78. There is no volatility as much in the as such in the market. If we talk about the put call ratio changes for Nifty, it is around 1.34. It is not overbought, but it is near the overbought zone. So we'll have to see how the put call ratio takes place today, because today is the weekly expiry of Nifty. For Bank Nifty, it is 0.71. It is in the comfortable range. For change in open interest for Nifty Index Future, it is around minus 2.11%, and the activity was short covering. For highest open interest strike price, for put, it is 25,000, and for call, it is 25,500. So we may see some resistance towards 25,500, but we can also expect some support in 25,000 and 24,900 level. For Bank Nifty, the change in open interest is 1.64%, but the activity was short build-up. As we saw yesterday, there was some pressure in the Bank Nifty. For highest open interest strike price, for both put and call, it is 57,000 only. Now let's look for the FI long position. For FI long position, it is 9.9%, while in the previous session it was around 9.71%. So yeah, it has increased a little bit. For DI long position, it is 64.32%. For FNO band, there are 3 shares in FNO band: RBL Bank, Titagarh, and PG Electroplast. So yeah, we'll have to see today, because today is the Nifty weekly expiry. Market is trading above 25,000. We may see some short covering if some positive strength comes in.
All right, so all eyes on Nifty expiry today, and thank you so much, Pulkit, for taking us through all the cues that we need to watch out for in terms of the F&O setup that we are tracking today. But apart from that, there are lots of other cues that we need to keep in mind for today's trading session, and Snehi, my colleague, is now joining us again with all the details on that front.
Well, yes, lots of cues to watch out for very closely when it comes to action back home. It's going to be day 2 of the GST group of ministers meeting, and the agenda is going to be rate rationalization. Big agenda, big meeting, and lots to track on that front as well. Other than that, we'll have the PMI numbers coming out, or the HSBC services PMI numbers will be out, along with composite and manufacturing PMIs too. And since it's Thursday, weekly Nifty expiry, all eyes are going to be on that as well. Globally, from the US, UK, as well as Japan, we have global manufacturing PMI numbers coming in. From the US, along with that, you have initial jobless claims, as well as the very important annual Jackson Hole Economic Policy Symposium will be beginning, where Fed Chair Jerome Powell will be giving his last speech as his tenure in the form of Fed Chair. So that is going to be very, very important to track any commentary on the labor market, inflation, any visibility on rate cut in September, if or not, is going to be very important to watch out for. From Eurozone, along with their PMI, you also have consumer confidence data coming out in terms of global earnings. Walmart and Workday are going to be in focus, but that should focus back home, and some stocks in focus will go. The first one will be GMR Airports. The board is going to be mulling a 5,000 crore rupee fundraise, so watch out for that. Vedanta is the second stock in focus. The board is going to be mulling its second interim dividend. So these are stocks in focus on the back of their corporate action and board meetings. You have names like HAL and RVNL that will be trading ex-dividend, and it's going to be the last day to buy shares like Federal Bank, APL Apollo, IRCTC, Jindal Steel, LIC Housing, Lodha Developers, Paradeep Phosphates, and Godfrey Phillips among others, to be eligible for their dividend record date if you wish to do so. In terms of AGMs, you have Yes Bank, PNB Housing Finance, CEAT, Aisha Motors, Brigade Enterprises, Bandhan Bank, Hindalco, and a whole host of other counters or companies that will be holding their board meetings and AGMs. So track that as well. And well, yes, that's going to be all the events to watch out for. Big thrusts and big cues going to be the GST GM meeting day 2, and of course the annual Jackson Hole Symposium in the US.
All right, moving on then to the stocks that you need to keep on our radar before today's trading session starts. So for that, we are joined by my colleague Sharad, who's now joining us with all the stocks. Ashesha is also here with all the stocks in focus. So first up, Sharad, let me come to you. Take us through all the stocks we need to keep on our radar before our today's trading session starts.
Largely, the insurance stocks are expected to be under pressure today, as the overall GST Council from the states are accepting that there would be an exemption coming in the insurance space, especially proposed for the individuals. Now, of course, this is important because the insurance company's input tax credit, that will be coming down, or it might even become nil. So that is a very negative factor for the companies, especially having a higher exposure in the personal segment as compared to the group segment. Now, over this, the higher negative impact is expected for the life insurance players such as SBI Life, HDFC Life and Max Financial. And for general insurance, Star Health and Niva Bupa have a high contribution in the overall individual space. Now, also the consumption, auto and the cement pack would be in focus as GST's Council of Ministers meetings happens. Relaxations are expected to be announced and a two-slab structure would be coming in. So we would be revisiting this theme, and of course the markets have rewarded over the last 3 to 4 sessions. OMC's Reliance and GAIL, they would be in focus. They will be positive. Russia is offering a 5% discount on the crude purchases and even LNG supplies. Interestingly, more than 30% of India's imports come from the Russian markets. Bharat Dynamics and defense stocks would be in focus. Yesterday we saw HAL in focus as Tejas aircraft orders were given out, roughly 62,000 odd crores, and the biggest beneficiary for this Agni 5 missile testing is Bharat Dynamics, and also components are coming from other defense players as well. Shree Cement, positive news flow as well, as the income tax department has reduced its earlier tax demand from 588 crore to only 222 crore rupees.
All right, so those are a lot of stocks that we need to keep an eye out for in today's trading session. But Ashesha, let me come to you now. Which are the stocks on your list? What are you tracking?
Well, yes, first up, let's talk about Vedanta, because NCLT has now deferred the date for hearing the demerger process matter to the 17th of September. And this is on the back of objections that were filed by NCLT and several other government bodies, to which the company has also replied. In fact, the company has informed the court that Vedanta will now issue a corporate guarantee favoring Petroleum Ministry once the demerger is effective. And apart from that, the board will also be considering second interim dividend for FY26 today. Remember, so far this year, company has already declared a dividend of 7.5 rupees per share. This is the second interim dividend that will be considered today. So Vedanta will be in focus on the back of that. Apart from that, from the cement sector, India Cements will be in focus because Ultratech Cement is looking to offload nearly 6.5% stake in the company. Now remember, Ultratech owns about 81% stake in the company. Floor price is fixed at 368 rupees per share, and this implies a marginal discount as compared to yesterday's closing price. So Ultratech Cement and India Cements in focus on the back of this OFS that is likely to happen today. Meanwhile, V-Guard Industries will be in focus. ICICI Prudential Mutual Fund acquired nearly 1% stake in the company, which is worth about 245 odd crores, and the promoters were the seller in this block deal that took place yesterday. So keep an eye out on V-Guard Industries as well. Shifting focus to two companies that will be in focus on the back of order wins. One is Jupiter Wagons. They have received letter of intent for Vande Bharat train. This is worth about 215 crores. Railtel, they have received two orders worth 50 crores from Odisha and Kerala state government. So both these railway and railway ancillary companies in focus on the back of order wins.
All right, so all those stocks you need to watch out for in today's trading session. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you more updates on the market. Stay tuned.
Hong Kong's Hang Seng Index, which is trading, just about flat, but with a shade of green on the positive side around that 25,173 level. Next up, we have South Korea's Kospi Index, which is also trading in the green, about 0.8% higher at that 3,773 level. Next up we have the Shanghai Index, China's Shanghai Index, which is trading about 0.2% higher as we speak around that 3,773 level. On the other hand, there's Nikkei Index, Japan's Nikkei Index, which is the only one which is trading in the red as of now, trading about 0.5% lower at that 42,692 level. Australia's ASX 200, that is also opened in the green, trading about 0.7% higher as we speak at that 8,978 level. On the other hand, The Nifty, the implied Nifty is suggesting an absolutely flat start for the Indian market, but likely in the green. We did manage to end above that 25,000 level yesterday and likely to hold on to that level today as well. That's what the implied Nifty is suggesting as of now. So yeah, a mixed day coming in for the Asia Pacific markets, but mostly in the green except Japan's Nikkei index, and a positive start expected for the Indian markets as well. Ankita.
Well, absolutely. That's what we are penciling in. And in fact, we are also waiting for investors are watching out for the region. HSBC, India's HSBC Composite Flash Purchasing Managers Index reading for August, which provides an early snapshot of the performance of the private sector economy. That's expected later in the day. But for now, flat start is what we are expecting. In fact, the GIFT Nifty is flip-flopping between the red and the green. It's very, very marginally in the green right now. In fact, a very, very muted start is what we're expecting for the street. But with that, it's time for us to slip in a short break. Don't go anywhere. We'll be back with more updates on the other side. Some big relief coming in on health and life insurance premiums. Now, we did see that GST announcement coming in by PM Modi on Independence Day. But now, on top of the expected rate rationalization, a GST group of ministers has proposed exempting health and life insurance premiums for individuals from the levy. Now, this could be another reform under the GST 2.0 changes, addressing the GOM tasked to examine the rate rationalization, the future of compensation cess and insurance. Finance Minister Nirmala Sitharaman said that the pronged GST reforms will seek to provide greater relief to consumers, farmers, the middle class and the MSMEs while ensuring a simplified regime going ahead. Now, currently the health and the life insurance premiums attract 18% GST. Well, let's go across to my colleague Prakash Priyadarshi, who's joining us with the details of what can we expect.
The GST GM held a meeting and there was wider consensus that GST exemptions should be provided on insurance premiums, a big development coming in at the beginning of the meeting. The finance minister addresses GM, set the ball rolling, suggested GM to have wider deliberations on the centre's proposal and come out with comprehensive recommendations. In fact, after the meeting, we spoke with several ministers and they were of the opinion that the exemptions, GST exemptions should be provided on insurance premiums, but they strongly recommend that a mechanism should be developed to pass on the benefit of reductions to the consumers, not to companies. Along with that, some states were apprehensive when it comes to revenue loss, which is estimated at rupees 9,700 crores. But they are also of the opinion that there will be greater insurance penetration, and that will benefit consumers going forward. It is important to note that there was wider consensus on exemptions, but it was for individuals. Probably the benefits are not available for group insurance or corporate insurance premiums, a very significant development coming in. However, there is no clarity and we are expecting more clarity to emerge going forward. But at this point of time, a very significant development coming in as there was wider consensus among GOM members to provide GST exemption on insurance premiums.
All right, thank you so much, Prakash, for taking us through all those details on the latest developments and what to expect from the meeting today. But moving on and analyzing this impact further, how this 0% GST on insurance premium is going to impact individuals. My colleague Sharad is now here to analyze it all and share it with us.
The overall impact analysis for the insurance stocks is that they will be missing out on the input tax credit, and because of that, most of the ministers in the state are expecting that for the individual insurance segment, both life and general insurance, it's likely to get a big exemption, and that hurts the players having a higher exposure in the retail segment. Now let's look at the July data, and over here LIC, it's even Stevens, so not so much impact would be there, but stocks such as SBI Life, Max Financial Services and even HDFC Life have a higher exposure to the individual segment by more than 85% of the business coming from there. ICICI Life, it's likely to be a likely neutral impact because over here also the overall coverage between group and the individual segment is almost half-half. Moving on in the health insurance segment, Star Health is having a major chunk of it in the retail segment, and that's roughly 95%. So there will be an adverse impact on the stock. ICICI Lombard won't be so much because almost 61% of it comes on the group schemes. Niva Bupa and New India Assurance, the story is different. Niva Bupa, roughly 69% of this total exposure is coming in the individual segment, while it is still very insulated for New India Assurance and even GIC as well, where the group insurance is something which is having a higher exposure.
All right. Well, a group of ministers on insurance submitted a proposal to exempt life and health insurance premiums from the GST for individuals, like we've been talking about. And this proposal will be reviewed by the GST Council. Here's with let's go across to my colleague Samrat Chaudhary, Bihar. Let's hear in what Samrat Chaudhary, Bihar Deputy CM and Telangana Finance Minister, had to say on this matter. Let's listen in.
लोगों ने सबकी इच्छा रही कि इसको पास किया जाए और गवर्नमेंट ऑफ इंडिया का प्रस्ताव स्पष्ट है कि सभी जो आदरणीय प्रधानमंत्री जी ने लाल किले से कहा है कि इंश्योरेंस के सेक्टर में इंडिविजुअल या उनके परिवार के इंश्योरेंस को, हेल्थ इंश्योरेंस को फ्री एक तरह से जीएसटी से मुक्त किया जाए, तो उस पर चर्चा हुई है सबका और इसका रिपोर्ट लेकर अब जीएसटी काउंसिल को मैं दूं.
Wanted that insurance GSTs to be brought it down to the zero. But at the same time, we made it very clear the premium benefits, whatever you are reducing that GST, it has to go to the people, to the policy holders, not to the companies. This is what some mechanism you have to evolve to see to that this, whatever we are trying to do, should go to the people. See, the revenue loss that, they are expecting somewhere some 9,700 crores. But overall.
All right, so that's the word coming from Bihar and Telangana. But moving on, Punjab Finance Minister Harpal Singh Cheema says that Punjab has been incurring a loss due to GST and advocated for structural reforms in GST. Now let's go across and listen into his comments.
वही व्यू पॉइंट रखा है कि राज्यों का, जो पंजाब की एग्जांपल दे दूं मैं, तो पंजाब का 21,000 CR पर ईयर लॉस हो रहा है जीएसटी आने के बाद, जीएसटी रिजीम लागू होने के बाद. जब तक कंपनसेशन सेस मिलता रहा ठीक रहा, उसमें कोई आपत्ति नहीं. जब कंपनसेशन सेस खत्म हो गया तो अब पर ईयर 21,000 CR का पर ईयर हमें रेवेन्यू लॉस है स्टेट को. और जबकि हमारी कंप्लायंस, जो टैक्स कंप्लायंस है, जो जीएसटी की कंप्लायंस है, वो देश के पहले 3 राज्यों में हम आते हैं. कंप्लायंस हमारी सबसे ज्यादा है, रेवेन्यू हमारा कम है. इसका मतलब कहीं ना कहीं इसमें स्ट्रक्चरल चेंज की जरूरत है.
And well, let's go across and listen into Nil Sate, who's the ex-IRDAI member, and what he had to say about the matter.
All these plans where it was significantly observed that substantial amount of premium is coming, there is a possibility that premium may go up slightly. But again, there is nothing to worry about it. Ultimately, even if the premium goes up, it is not going to go up significantly. It will be slight increase. It may be slight increase. I'm not saying it will be. It was not necessary to have GST on life and health because these are necessities of life. And when government cannot provide full health cover through social security and also the term cover through social security, when somebody else is providing, why should we tax? This will definitely help the insurance industry to grow further. I'm 100% sure about it because people will be more happy to pay slightly more. See, one perception again is the term insurance rates in India are one of the lowest in the world. Can you imagine? So even if it goes up by 5%, it doesn't make a difference.
All right, so that's the latest word from Nil Sate. But we also caught up with LIC ex-MD Raj Kumar. Let's listen into what he had to say about the GST issue.
Depend upon many other factors. For example, the mortality. When the COVID was there, the mortality suddenly went up and the term insurance premiums were raised up to 35% by the reinsurers, which were passed on to the insurers, and then they passed on it to the policy holders, the new policy holders. So I don't think that the premiums will go up. It's not like any other industry where when the rates taxes are reduced, and the benefit is not passed on to the consumers. In life insurance and health insurance industry, it doesn't look like. And health insurance is becoming a necessity as the health costs are going up. So it will be a good idea to exempt these two premiums from the GST. And the industry definitely will not be, it's not like any, as I said, other consumable where the manufacturers sometimes pocket the tax benefits. Here it's an additional thing, and the premiums are dependent upon many other factors.
And well, Prime Minister Narendra Modi had in his Independence Day address had announced an overhaul of the 8-year-old indirect tax, calling it a Diwali gift for the people. Now, the Centre has proposed scrapping the 12% and the 28% rates and retaining just 2-slab structure. Now, the GOM on rate rationalisation will deliberate on the Centre's proposal for the wider GST revamp today and make a recommendation to the GST Council, which was likely to meet in September. My colleague Prakash Priyadarshi is joining us with the details on today's meeting and what to expect.
The GST GM on rate rationalisation is scheduled to meet today, a very crucial meeting ahead of the next GST Council meeting. The meeting is also important in the context of a Centre's proposal, where it endorses two rate structure, essentially 5% and 18%. It is expected that the Finance Minister will address the GOM at the beginning of the meeting. In fact, she will present the Centre's views. A very significant development coming in. We are expecting mega reforms under GST going forward. You are aware that the Prime Minister has already set the tone. In fact, made significant announcement from the Red Fort as there will be mega reforms under GST. Following that, the process had been initiated. In fact, the Centre has sent a comprehensive proposal to GST GM and state governments for their consideration, and it is expected that the GOM will have wider deliberation and consultation before finalizing its recommendations for next GST Council. Along with that, it is expected that there will be significant reduction after implementation of these proposals. There will be significant reduction in GST rates that will benefit consumers, traders, farmers, students, industry and key economic sectors.
All right, thanks Prakash for all those details. So the GST Rate Rationalisation meeting is today, and it looks like the consensus is that the rationalisation could bring down prices by Diwali. But let's hear it from our experts on how exactly that's going to happen.
From a consumer standpoint, what better expectation can we have for this Diwali? That a lot of the products that we buy, whether was at 12, a lot of them are expected to move to 5. And, was at 28, expected to move to 18. And even the ones that are at 28 plus assess, while it's a little speculative, one can expect that the net tax collection on each product should drop and the consumer should get a benefit.
And well, the other big developing story is the fact that the Promotion and Regulation on Online Gaming Bill 2025 has been passed in Lok Sabha. Yesterday, Electronics and IT Minister Ashwini Vaishnav introduced the Promotion and Regulation on Online Gaming Bill 2025 in the Lok Sabha. This bill encourages e-sports and online social games while prohibiting harmful online money gaming services, advertisements and financial transactions related to them. It has a provision for the appointment of an online gaming authority for coordinated policy support, strategic development and regulatory oversight of the sector. Well, my colleague Sumita Kharir also spoke exclusively with the IT Minister Ashwini Vaishnav on the new bill. Let's go across and listen in at what he had to say.
Gaming sector, online gaming sector has become a very important part of the digital technologies, and our country today is known for being a technology friendly country. This sector has 3 segments. 2 of the segments are very useful for the society. 1 segment is causing a lot of harm to the society. The 2 segments which are useful for the society are e-sports and online social gaming. This bill aims to promote these 2 segments, for which an authority will be created. There will be new schemes where people get more employment, and this creative economy grows. The third segment, where the harmful impact is very clearly visible in the society, the middle class families who are losing their entire life savings. There are so many instances where young boys and girls, they commit suicide because they are not able to face the losses which happen during the online gaming that they go for. And that kind of harmful impact is what this bill tries to protect the society from. Even the World Health Organization has declared gaming disorder, which causes very serious psychological issues among the people who play online money games in a very regular way. So that's the objective, is to promote the good things for the society and prevent these harms which are coming to the society. And when we have to look at the harms to the society versus the one segment of the industry, we have to see the interest of the society as paramount.
All right, so that was the IT Minister on the intent of the online gaming bill that has been passed in Lok Sabha yesterday. But on that note, we'll take a very short break. Be right back with more on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter.
Now you're watching Market Cafe with me, Kanishka, Sarkar and Ankita, Saxena. Well, let's shift focus and take a look at the top global story then. Now, global geopolitics is testing fault lines, with the US President Donald Trump openly questioning whether Vladimir Putin truly wants a deal to end the Ukraine conflict, while signaling that both Kyiv and Moscow must show flexibility. Even as Washington pushes for talks, trade tensions are rising. Now, India, meanwhile, is looking at other geographies for diversification of its exports. In fact, yesterday, Russian officials have indicated that the country's markets are open for Indian goods amid challenges from Trump's tariffs.
All right, let's get to the top headlines then from all over the world. In more news, Trump has said his administration will not approve solar or wind power projects, even as electricity demand is outpacing the supply in some parts of the US. This comes amid his past complaints that solar takes up too much land. Renewable companies now fear that projects will no longer receive permits that were once normal course of business.
All right, moving on. Microsoft has curtailed Chinese companies to access to advance notifications about cybersecurity vulnerabilities in its technology after investigating a potential leak. Microsoft spokesperson has said that the change will limit access for program participants in countries where they are required to report vulnerabilities to their governments. In fact, Microsoft will no longer provide MAPP participants affected by the change of proof of concept code, instead issuing them a general written description of the vulnerabilities when patches are released.
An Israeli military has announced the first step of an operation to take over Gaza City and called up 60,000 reservists. While the government considered a ceasefire proposal to pause nearly 2 years of war, military officials said that the revisits would report for duty in September, and most of the troops mobilized for the offensive would be active duty personnel. Hundreds and thousands of Palestinians in Gaza City are expected to be ordered to evacuate and head to shelters in South Gaza.
Next up, Sony has announced that it will raise the prices of its PlayStation 5 consoles in the US by around $50 from August 21st, as the Japanese conglomerate navigates a slow recovery in the video game market with US tariffs tariffs threaten to raise costs. Now, all three PlayStation 5 consoles will see a similar price hike, with the most expensive PS5 Pro version expected to cost around $750.
And in an effort to gain more influence over the US central bank, Trump has now called on Federal Reserve Governor Lisa Cook to resign on the back of allegations made by one of his political allies about the mortgages she holds in Michigan and Georgia. However, Cook has shot back and said that she had no intention of being bullied to step down from her position after the U.S. Federal Housing Finance Agency Director William Pult raised the allegations in a tweet.
Next up, in the July meeting, the Federal Reserve officials have expressed worries about the state of the labour market and inflation, although most have agreed that it was too soon to lower interest rates. Policymakers noted rising threats to the economy that would warrant monitoring. Although they largely agreed that their current stance was the appropriate way to go, Trump's tariffs were a central part of the discussion.
All right, let's go across to my colleague Ashesha, who's standing by with all the details of Vedanta's proposed demerger that has faced delays as Mumbai's bench of NCLT defers the hearing to 17th of September. Now, the move comes in after the Ministry of Petroleum and Natural Gas raised concerns. My colleague Ashesha is now joining us with the details of this.
Well, yes, Vedanta will continue to be in focus today for the second consecutive day. This on the back of several developments that have taken place over the last 2 days. Remember, NCLT has now postponed hearing on Vedanta demerger matter. This has been postponed to the 17th of September. And this after government and SEBI lawyers questioned the demerger process and they raised objections. This, remember, had come yesterday during market, but after market, Vedanta has now also gone ahead and filed a response to this NCLT hearing where they say that they've informed the court that Vedanta will issue corporate guarantee favoring Petroleum Ministry once the demerger has been completed. So some important clarification that has come in from the company's front with respect to the objections that were raised by NCLT yesterday. Now, to put things into perspective, it was in September 2023 when Vedanta board had first announced the demerger plan. In March 2025, deadline was further extended. The demerger deadline was extended to 30th of September, and now this major hurdle has come through, and the next hearing is scheduled to happen on 17th of September. Perhaps the date will have to be extended further beyond 30th September as well. Now, Anil Agarwal had earlier categorically spoken about the benefits of this demerger, where he said that each of these demerged businesses have the potential to grow into a $100 billion corporate entity. He also said that each business will get renewed focus, new investors, and a unique opportunity to achieve this new potential. So very important commentary that had come in from Anil Agarwal earlier. But apart from this, there is also another trigger for Vedanta, and that is the board of directors will be meeting today to consider second interim dividend for FY26. Remember, in June earlier this year, they have already announced a dividend of 7.5 rupees per share, and this will be the second interim dividend. To give a year-wise perspective, in FY25, they had announced dividend of 43.5 rupees per share, of about 40.5 rupees per share in FY24 and 101.8 rupees per share in FY23. So apart from the demerger overhang, which will continue to be a trigger for the stock going forward, Vedanta will also be in focus on the back of this board meet, which will consider second interim dividend for FY26.
Thank you, Ashisha, for taking us through the details of the demerger overhang and what to expect from the board meet today as far as Vedanta is concerned. But moving on, the financial world is abuzz with anticipation as the annual Jackson Hole Economic Symposium draws near, which will be held between August 21st, that is today, and till the 23rd of this month. Now, this year's theme is labour markets in transition, demographics, macroeconomic policy in focus. My colleague Varun is now joining us with all that we need to expect from this meeting.
Well, so the Jackson Hole Symposium would be a 3-day event that would start today and that would end on the 23rd of August. But going into Jackson Hole Symposium, it is also important to note the FOMC minutes, which are actually highlighting towards uncertainty going ahead. The minutes also say that tariff effects may take longer to materialize, and there are growing concerns over the stretched assets valuation. Also, the majority of the members of the FOMC, they view the overall inflation as a bigger risk than employment. The symposium that would start today, that would end on the 23rd of August. This time the theme is labor markets in transition, demographics, productivity, and macroeconomic policy. Now, if you look, the market is expecting the overall, Fed Chairman Jerome Powell to actually highlight what he's going to do in the upcoming FOMC policy, that is in the month of September, because some actually expect him to actually highlight a 25 basis point rate cut, but some also expect that he might not say anything. But yes, it would be very interesting because this might be the last, Jackson Hole Symposium for Fed Chairman Jerome Powell, because his tenure as the Fed Chairman is going to end May of next year, that is 2026. Also, if there is an indication in the overall drop in interest rate, so it could be precursor to the real announcement in mid-September meeting. So it's gonna be all eyes on Fed Chairman's, speech, what he says in the symposium about the rate cuts in September, and he would be speaking tomorrow, that is on the 22nd of August. So it's an all-important macroeconomic event, Jackson Hole Symposium, which you need to keep an eye on.
All right, we will keep that on the radar, but for now it's a goodbye from Kanishka and the entire team that has put the show together. Thank you so much for tuning in. Don't go anywhere because the market is going to take the market action forward.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.